Warren Buffett, the man who mastered money by doing almost nothing. Warren Buffett is often described as the greatest investor who ever lived. But that description hides a truth most people don't like to hear. His success did not come from speed. It did not come from luck. And it definitely did not come from doing what everyone else was doing. In fact, if Warren Buffett were starting today, most people would ignore him. He doesn't trade daily. He doesn't chase trends. He doesn't panic in crashes. And he doesn't try to get rich fast. Yet, over the course of his life, Warren Buffett quietly turned patience into more than $100 billion. This is the full story of how he did it. A child obsessed with numbers. Warren Edward Buffett was born in 1930 in Omaha, Nebraska, at the worst possible time to be born into a capitalist world, the Great Depression. Money was scarce. Fear was everywhere. Banks were failing. But while the world worried about survival, young Warren was obsessed with numbers. Not toys, not sports, numbers. At just 6 years old, he bought packs of Coca-Cola bottles, sold them individually, and tracked his profit. At 7, he read books about money meant for adults. At 11, he bought his first stock. It wasn't because he wanted to be rich. It was because money, to him, was a puzzle, and puzzles demanded patience. Learning early what most never learn. By his teenage years, Buffett was already running small businesses. He delivered newspapers. He rented out pinball machines. He reinvested every dollar he earned. At 13 years old, he filed his first tax return and deducted his bicycle as a business expense. This wasn't ambition. It was instinct. While others spent money to feel good, Buffett saved and invested to feel safe. Fear of loss shaped him more than desire for gain. That fear would later become his greatest advantage. Rejected, but not discouraged. When it came time for college, Buffett applied to Harvard Business School. They rejected him. Most people would have taken that as a sign. Buffett didn't. Instead, he enrolled at Columbia Business School, where he studied under Benjamin Graham, the father of value investing. Graham taught one radical idea. The stock market is not a machine for instant profits. It is a tool for transferring money from the impatient to the patient. That idea changed Buffett's life. He learned to see stocks not as pieces of paper, but as ownership in real businesses. He learned to demand a margin of safety. And most importantly, he learned to wait. Early success and a costly mistake. After graduating, Buffett began managing money for others. His returns were impressive. People trusted him. But his first major mistake would define his future philosophy. He invested heavily in a struggling textile company called Berkshire Hathaway. On paper, it looked cheap. In reality, it was dying. The business drained cash. The industry was collapsing. And Buffett kept throwing money at it. Years later, he would call it one of his biggest mistakes. But instead of abandoning it completely, he did something unusual. He repurposed it. The transformation of Berkshire Hathaway. Buffett turned Berkshire Hathaway into a holding company, a shell used by great businesses. Instead of fixing bad companies, he focused on buying excellent ones. Insurance companies, consumer brands, businesses with predictable cash flow. He bought companies not to flip them, but to own them forever. While Wall Street chased excitement, Buffett chased certainty. And certainty compounds. The power of doing nothing. As decades passed, Buffett's strategy remained boring. He ignored technology booms he didn't understand. He ignored market noise. He ignored critics who said he was outdated. During crashes, he waited. During bubbles, he stayed calm. And when fear created discounts, he acted. This wasn't genius. It was discipline. Most investors fail not because they're stupid, but because they are emotional. Buffett removed emotion from the equation. The secret nobody wants to copy. Here is the truth most people avoid. Over 90% of Warren Buffett's wealth was made after the age of 50. Not because he suddenly became smarter, but because time finally had enough space to work. Compounding requires one thing more than intelligence. It requires endurance. Buffett stayed in the game while others burned out. His lifestyle tells a real story. Despite his wealth, Buffett lives in the same modest house he bought decades ago. He eats simple food, drives basic cars, avoids luxury. This isn't marketing. It's alignment. He understands that money is a tool, not a scoreboard. And tools are meant to be used, not worshipped. The rule that protected everything. Buffett follows two rules. Never lose money. Never forget rule number one. This doesn't mean he never makes mistakes. It means he avoids mistakes that destroy him. He prefers missing opportunities over risking ruin. And that mindset, more than any strategy, protected his fortune. Why Warren Buffett is hard to imitate. Many people understand Buffett's strategy. Very few can follow it because it demands patience in a world addicted to speed, calm in a world addicted to drama, discipline in a world addicted to emotion. Buffett didn't outsmart everyone. He outlasted them. The real lesson of his success. Warren Buffett's story is not about stocks. It's about behavior. He mastered fear, controlled greed, and respected time. Money didn't make him powerful. His relationship with M.O. Nate did. The enduring legacy. Today, Buffett is more than an investor. He is proof that slow, deliberate decisions can outperform chaos. That consistency beats brilliance. And that wealth built patiently lasts longer than wealth built fast. His story isn't exciting. That's why it works.